Hi everyone, welcome to Adjust with T, where we help students understand accounting adjustments clearly and confidently. So if you're new here, welcome and don't forget to subscribe. If you're a returning subscriber, welcome and thank you for subscribing. So today we'll be looking at income received in advance. So income received in advance, it is money that the entity has received for goods or services not yet delivered. So it's like receiving payment, like upfront payment in simple terms. So it's money that you would have received, but you wouldn't have necessarily done the job for you to say that money belongs to you now. So we call that as income received in advance. So where do we record income received in advance? We record it as current liabilities in the balance sheet as the entity still owes the money for the service or the product, right? And then we record it in the income statement under operating income because we had received that money, but then because we have not paid or we have not rendered the service or delivered the goods for the money, we will then record it as a current liability because, say for instance, the client decides they no longer want the goods, they want us to refund, so we can still pay it. That's why we record it under trade and other payables in the current liabilities. So we'll look into an example of following from the previous video's example. We are provided with the accounting records or the information which relates to the accounting records of Maruping dealers for the year ended 31st August 2024. We are told to take into account the information to prepare the income statement and the balance sheet. Then we give an information A, which is the trial balance as at 31st August 2024 for Maruping dealers. Then we give in the trial balance, we given rent income for 31,300. Then we are told that the rent has been received for 3 months. The rent has been received for 13 months. Take into account that the rent was increased by 250 per month from 1 July 2024. So how we'll go about handling this accrued expense information is that first things first, you need to write down your accounting period. So we know that our financial year starts at 1st September 2023 and then it ends at 31st August 2024, right? So that is our accounting period from 1st September up until 31st August. Then we are told that the rent was received for 13 months, but if you count from 1st September to 31st August, this is only 12 months, right? 12 months, which means that rent was received for 13 months, including September 2024. Then that makes it the 13 month, right? And then we are told that rent was increased by 250 from 1st July. So let's say 1st July 2024, right? So from there, we have 1 July 2024, right? So from July up until 30 September 2024, we have how many months? We have July, August, September. We have 3 months, right? So that is 3 months. So for these 3 months, rent was increased by 250. But before the 3 months, rent was not increased, right? Then we need now to find out how much is 3 months increase. So we need to find the 3 months increase, ne? We are told that it was increased by 250. So we say 250 multiplied by 3 months, it will give us 750, right? So this is what our increase was, ne? Then we need to find out how much was rent before the increase, right? So we need to say rent before increase. So we given in the trial balance that the rent is 31,300, right? Minus the increase, which is 750 rent. Then rent before increase was 30,550, right? But we are told that we received the rent for 13 months. So we divide that by 13. Then we need to find the rent per month. So this will be our rent per month, right? So if we divide that by 13, you will come to 2,350. So rent is 2,350 per month, right? Then we need now to find that how much was then rent per month after the increase. So if rent per month before increase, so this is before increase, is 2,300. So rent per month after increase, rent per month after increase will be the 2,350 plus we know that it increased by 250, then that will give us an amount of 2,600. So this is what was paid in advance for that 1 month, because we know that it was paid for 13 months. So 13 months includes September 2024, but we know that our accounting periods end as at August 2024. So in September 2024, the rent was 2,600, right? So how then will we go about recording this in the income statement? We'll go to operating income, and then we'll have rent income. We know that in the trial balance, they've given us 31,300, right? Minus, we need to minus now the 13 months because it belongs to the 2025 financial period. It does not belong to this period. So we say 31,300 minus the 2,600 that we calculated as the accrued. Then we will only record in our income statement a rent of 28,700, right? And then in the balance sheet now, under trade and other payables, we will then record the rent that was received in advance of 2,600. Right. I hope that made sense, and that will be all with regards to income received in advance. So if you have any questions, any comments, any queries, don't hesitate to put them on the comment section below. I will be available to answer to all your queries, your comments, your questions. And don't forget to subscribe, like, share with anyone that you think this information will be useful to them. And remember, we tackle one adjustment at a time so that we don't get confused. That will be all from me today. Bye. See you on my next one. Bye.